June saw volatility return briefly, with equity and bond markets caught off guard by the prospect of the pivot in Fed policy that we highlighted last month. While the Fed statement does likely signal the start of a new phase of the economic cycle, investors should not overlook the opportunity offered by earnings season in July and August. The reporting season in the first and second quarters of the year have already accounted for 2/3 of the total return in the S&P 500. We expect the upcoming earnings season can add to that total. Even though expectations remain high, with earnings growth forecast to reach 65% year-on-year, corporate earnings estimates for the coming reporting season still sit nearly 10% below the actual results reported in April and May, suggesting upside exists to even optimistic consensus forecasts. We expect U.S. big tech and quality cyclicals should be the primary beneficiaries of the coming strong earnings season. For bond investors, we have continued to shift our focus to risk management, given the move to all-time tight spreads across much of the U.S. credit market. Indeed, with U.S. Treasury yields very compressed, caution is warranted starting in August, as the Treasury stops drawing down its cash reserves and begins issuing once again, potentially bringing upward pressure to long-dated yields like seen in February and March. As a result, with risk to yields and credit spreads, we see U.S. senior loans as offering the most attractive risk-reward profile for investors seeking income. Despite our optimism going into earnings season, we expect it will likely mark the end of the recovery phase of the U.S. economic cycle and begin a transition into the mini-cycle phase highlighted last month. We expect that as equities rally on the back of strong results, investors will be offered an opportunity to raise expectations and focus on beneficiaries of the next round of targeted fiscal stimulus in both the U.S. and Europe. In addition, investors should expect a new volatility regime to take hold moving into the fall, with higher rather than lower volatility common in markets. Investors should use the earnings season optimism as an opportunity to take advantage of the historically low volatility in equity markets and rebuild portfolio protection looking ahead. For more information about how we have prepared to benefit from earnings season and are pivoting portfolios as the economy transitions into the mini-cycle phase, please visit us on ubp.com.